Breaking news, asterisk, asterisk. A severe financial crisis is gripping China's real estate and banking sectors, with growing unrest spreading across major cities. What began as a housing slowdown has now spiraled into a full-blown mortgage and banking crisis, shaking the foundations of China's economy and sparking rare public protests nationwide. As small banks collapse and homeowners stop paying their mortgages, Beijing is facing one of the largest domestic financial threats in decades. Hashtag mortgage crisis, the heart of the collapse. The crisis stems from a years-long property boom in China, where developers borrowed heavily to build massive residential complexes, many of which were sold before completion. These pre-sale models became standard across the country, locking millions of Chinese citizens into mortgage payments for homes that were never finished. However, as major developers like Evergrande and Country Garden defaulted on debt, construction came to a halt. Tens of thousands of unfinished or abandoned housing projects are scattered across China, leaving homeowners paying mortgages for buildings that don't exist. The result? A growing mortgage boycott movement, where ordinary citizens across provinces have stopped paying their loans, demanding the government intervene. Hashtag banks on the brink. The impact on the banking sector is now severe. Dozens of small and regional banks, especially in Hunan, Anhui, and rural areas, are facing liquidity shortages. Some have already collapsed or halted withdrawals, leading to angry protests and clashes with police. In Hunan province last year, depositors staged mass demonstrations, accusing banks of freezing their accounts. The government responded with limited repayments, but trust in the banking system has eroded rapidly. Now, even larger city banks are showing signs of stress. According to leaked financial data, non-performing loans, NPLs, loans unlikely to be repaid, have surged to dangerous levels in sectors tied to real estate. With unpaid mortgages rising and developer defaults continuing, Chinese banks are struggling to stay afloat. Hashtag protests break out across China. The financial pain is no longer private. It's public and loud. In major cities like Shanghai, Chengdu, and Wuhan, hundreds of homeowners and depositors have taken to the streets holding banners that read, "No home, no mortgage. Return our money. We want justice, not lies." While protests in China are usually rare due to strict state control, the scale and frequency of these demonstrations are growing week by week. Social media videos showing confrontations with security forces are being swiftly censored, but not before going viral. The Chinese government has tried to suppress dissent by detaining organizers and blocking online forums, but economic desperation is overpowering fear. For many, it's no longer about politics, it's about survival. Hashtag government's response. Too late? In response, Beijing has rolled out limited stimulus packages, ordered local governments to ensure project completion, and instructed state-owned banks to issue emergency loans to struggling developers. But critics say these actions are too little, too late. Many analysts believe the problem is systemic, rooted in China's over-reliance on real estate as a growth engine. For decades, property contributed up to 30% of China's GDP, fueling jobs, investment, and local government revenues. Now that sector is imploding, taking down construction, banking, and consumer confidence with it. To restore faith, the Chinese Central Bank, PBOC, is now considering cutting interest rates, loosening mortgage rules, and expanding loan guarantees. But these short-term fixes may not address the underlying trust crisis in both housing and financial institutions. Hashtag global impact. Could it spread? The collapse of China's real estate sector is not just a local problem. International investors are watching closely as major Chinese property developers owe billions in US dollar-denominated bonds. Defaults by companies like Evergrande have already triggered waves of global losses. International banks and funds exposed to Chinese real estate assets are tightening risk controls, and many have downgraded China's outlook for 2025 and beyond. Some economists fear a Lehman Brothers-style collapse, where contagion spreads to global markets if China's banking system cracks further. Already, the yuan has come under pressure and foreign capital outflows have accelerated. Businesses operating in China are also reassessing their exposure, citing growing instability and lack of transparency. Hashtag, a threat to Xi Jinping's control? The mortgage crisis also poses a political challenge for President Xi Jinping. His administration has tightly controlled public messaging, portraying stability and strength. But the current crisis threatens that image. For years, the Chinese Communist Party promised rising prosperity and homeownership as pillars of the Chinese dream. Now, those promises are unraveling, and public anger is rising. If the mortgage protests grow or spread to other sectors, Beijing may face its most significant domestic backlash in over a decade. Observers say the leadership is in a bind. Cracking down too hard on protesters could trigger further outrage, while doing nothing may embolden the resistance. The coming months will test China's political stability, social contract, and financial credibility. Hashtag, what's next? Analysts agree. China's real estate model is broken. Fixing it will require deep reforms, not just band-aid bailouts. This may include ending the pre-sale model *** that leaves buyers vulnerable, auditing and restructuring failing banks and developers ***, improving financial transparency and consumer protection laws ***, reducing the economy's dependency on housing *** for growth. For now, uncertainty looms. Protests continue, confidence remains low, and the risk of a larger economic shock grows each day. Hashtag conclusion. China's mortgage crisis is far more than a housing issue. It's a crisis of trust, finance, and governance. As more citizens refuse to pay for homes they'll never receive, and as banks struggle to survive, the ripple effects are being felt far beyond China's borders. The world is watching, and if China cannot contain this storm, the consequences could be historic for its people, for its leadership, and for the global economy. This is a developing story. Stay tuned for updates.